of fintech covers so many different subcategories. So you have robo, you have security, lending, blockchain and crypto, reg tech, just to name a few. So when you invest in these different sectors, is it common? Do you look for this common characteristics across these different sectors, or do you focus on one? And we have a lot of entrepreneurs in the audience that are raising money. So specifically, any advice you can give them if they're in one of these categories, or are your kind of words of wisdom and advice for entrepreneurs relevant across different areas of fintech? So who'd like to start off?
Can I start on enterprise? Maybe I'll start with enterprise, then we could switch to consumer, since we have some...
No.
No. All right.
No, it's bullshit.
So how many people here are thinking, or either have an enterprise company or thinking about an enterprise company? A few. So remember, you only remember a couple of facts from today's discussion. So one is that you can have unlimited meetings with a bank. Unlimited. And you think you're making progress and you're not making progress. And the reason is because there are only certain times when a bank is really able to contemplate a change to one of its systems. They may be interested in understanding it and understanding your ideas and the innovative approaches, but to really change one of your systems is usually a couple of years of analysis. Seriously, a couple of years. And I have a rule in enterprise in particular, like if you're going to change a risk system, you have to have something that delivers immediate ROI, like it gives an immediate benefit, and it's around the edge of the enterprise usually. But that it also could be the way that the company would say, I'd like the whole place to look like this. So I'll give you an example, which is Blend Labs. So we met them. They were a young team focusing on the mortgage industry, one of the few Silicon Valley teams that really had a good understanding of it. They didn't know exactly what to do, but the choice is, do you want to do a direct-to-consumer or do you want to do enterprise? And what happened is we felt, well, every bank pretty soon is going to want a mobile mortgage origination system. To build that and to connect that into like a Wells Fargo, US Bank is really complex. They had a unique approach which delivered really effective, immediate ROI. But you didn't have to change like a giant, multi-million line type of code that's integrated in hundreds of systems, which is what it would be if you tried to change everything in mortgages. So so to me, remember, I would say if you can't get to a POC in 3 meetings with a bank, you're probably wasting time. And so that's a hard standard to meet, which means most of you are wasting time. So focus on that. And second, focus on something. Edge of the enterprise delivers immediate ROI, but the architecture is intriguing enough that it could be much bigger if it's all successful.
What's interesting to me coming into this space is the motivation I see behind a lot of entrepreneurs and companies. Maybe controversial, but I have met a number of companies where I think that their motivation is more a quicker acquisition than it is to build a big company, right? And our business in VC is to actually back companies that are going to be massive, big, game-changing companies. It's been an interesting dynamic for me. As a product person, it's actually pretty easy to see because you can tell who actually knows the customer and knows the customer pain points and people that don't. And there's a depth of understanding. So if you have a startup and you were looking to raise VC money, my biggest recommendation is to really dig into the customer pain points. Probably from being in it, you can tell right away whether someone has spent time discussing with customers and hearing what their main problems are and developing an interface design that's off of that. And I think it backs this conversation, because if you're trying to build, my bias, a massive company, which is probably the reason to raise VC money, I probably would be wary of bringing a bank in, because you're probably going down a closer acquisition path.
Yeah, I want to go back to the first question that was asked, which is, what do we look for, or what do you need? And I think one dichotomy in fintech, and this is how we actually think about it, any heavily regulated industry, so we do a lot in pharma as well, is that we look for, every VC will say like founding team, market size, right? You can read any blog post to see that. But in fintech, we really look carefully for people who both have a entrepreneurial spirit, ability, coupled with a real understanding and respect for the industry that you're playing in. Because, if you fuck up here, you go to jail. Companies get shut down. Hans has lived through along with one of my partners.
Many have long experience with disasters.
Right, and disasters here are particularly painful. And so it's important to us that when we back people that have both that entrepreneurial mindset, but move fast and break things doesn't work well in here, in this market, right? You have to have shown that you can surround yourself with people who are wise and that you take their advice. Otherwise, bad things will come to pass.
The thing that I think about in this space is brand. Has anyone heard the term tattoo brand, a tattoo brand? It's like literally one you're willing to tattoo on your body. I don't think anyone has a bank's name tattooed on their body.
You don't know?
I don't know, maybe someone in this room does. But historically, I think about this because I think businesses have an opportunity to both innovate, which is what we think about more on the tech and the product side, and to have great marketing. And the best businesses, and ideally the best investments, in my opinion, have both. And what I see often is that we're missing the brand. So even, candidly, with someone like Fidelity launching, the existing big brands, and I'm sorry, I don't mean to offend people who might be in those businesses here, but they haven't thought of themselves, I think, in a big way as a consumer brand. They haven't had to historically. So I personally think there's a massive opportunity to attract consumers by being what is the brand that is going to really resonate with consumers that consumers are going to trust. And right now I see a gap in the market because of that, which could be part of the answer.
Well, I think that's true. I mean, so first of all, I don't have an SVB tattoo, but we do joke about how bad of an idea it would be. I think it's true that there's space for consumer brands to come up, and there's obviously a lack of really emotional brand emotions in consumers of the legacy, the Goldman Sachs, the SVBs of the world. It's a little too easy to pick on the big guys. So I came from a YC company a year and a half ago into SVB, and my first inclination was going to be, they're so slow, they're never going to be able to move quickly. If I did this, I'd build a beautiful consumer brand that does X, Y, and Z. But once you start to go into the guts of these bigger institutions, you recognize there's a lot of painful things about building fintech companies that I would not wish on anyone as a pre-Series A funded startup. So it's important as the early stage one to keep in mind that banking charters aren't cheap, and there are some things that they've really solved well that it's easy to sort of forget and hate on the brand that they've.
In terms of an early stage company today, what really matters is, are you addressing a pain point that your customer base really cares about and will pay to have solved? So many of the things that I see are great, they solve pain points, but basically it's a lot to get the consumer to adopt, and number two, they really don't want to pay for it. And so I would just love to hear comments on that about, just what you've seen in the companies you've invested in. What is kind of a working strategy that is getting the customers to adopt something, particularly when it's new?
So so there's a lot of different ways to go with that. The most simple one, right, is an immediate cost savings opportunity, right? So you look at the online lenders, be it Lending Club, be it Prosper, be it SoFi, et cetera, right? They come to a consumer with a value prop of, you have $20,000 of debt or more, and we are going to save you 700 basis points, which turns into this much money, and we're going to do it right now, right? And that is a fantastic call to action. And the fact that it's easy and done nicely online is great. But being able to save somebody money today and be very intelligent in who you target and how much information you know about them when you target them is a very powerful thing in terms of driving growth and users.
I'll make an analogy to the weight loss world. If you're trying to drive behavior change, something that you get into pretty quickly is dopamine and how you're driving a response in people. How do they have early wins to feel good about their efforts? One of the big differences that's a big opportunity in this space that can create consumer traction is to your point about saving money. You actually have all the data. So I would have died to know what every of our customers ate at every moment of the day on Weight Watchers. I didn't have it because you have to ask them to track it, which is a very hard barrier to first overcome to then put behavior change on it. The benefit of this market is that you do have it. You can get literally a consumer's entire spending pattern, which lets you do things passively and create these delightful moments more automatically without them having to be an effort. So I still think that there's a massive opportunity in that space in terms of delighting the customer by saving them money or showing them patterns of their behavior they may not have known or realized about before you reveal it.
So we're going to run out of time in just a few minutes. So I'd like to ask one question, which I think most entrepreneurs that are in FinTech would like to know the answer to, which is, if you're going to be raising money in the next year, should you target a venture firm? This is assuming you're further than an idea on a napkin, but should you target a venture firm, or should you spend units of energy pursuing possible strategic partnerships, or more company venture money from some
What
of
stage are you talking about? I think that's a big
let's just say you're beyond angel, so kind of looking for the Series A or beyond, Series A or B.
Well, I would say, and I have great respect for large and small financial institutions and work with them consistently, but I don't think most financial firms are good Series A investors. It doesn't mean they won't be successful, but if you're the entrepreneur, they're not as good at helping you figure stuff out and be and create a better company. I think they add tremendous value later. And there's a few exceptions to that. I think, Chase, when they invested in Square, became an endorsement of the safety of Square, which was really an issue. So there's a couple times when it's made a big difference. But in general, I think you're better off with a venture firm helping you figure stuff out.
Yeah, to be fair, you're asking a bunch of venture capitalists if you should approach venture capitalists first or strategics first. But the answer is venture capitalists first for everything that Hans had said. The other one, right, which is down the road, assuming that you're trying to build this into a big business, is the potential signaling risk that it creates at an acquisition, right? And at the end of the day, if you have a strategic in there, there will be an assumption that they know more, and it will impact bidding and all of those things. And on top of, are they the right person that can help you get into the weeds to help you with your hiring and your strategery going forward?
Thank you so much. I think we could go on forever. This is just kind of hitting the tip of the iceberg, but there's a lot of knowledge within this group and a lot of support and perspective. So thank you, panelists, and thank you, audience, for listening in.
Thank you.